Hello, everyone, and welcome along to this live webinar. And today we are so excited. We have a special guest, Jamie York. Hi, Jamie.
Hello, hello. How you getting on?
Everything is great. Before we jump into the agenda, if you watch it on our YouTube channel, feel free to subscribe. And we are going to run today a special promotion for the people that attended to this webinar. And this is access to our premium plan for 3 months free trial. We will put the links on the chat for new users. So you can create your free account and then upgrade to the 90 days free trial for premium features. And for existing users, we will share a coupon which you can use when you upgrade your account from this settings page. So if you're on a basic plan, you will have a button to upgrade. Then you need to put the coupon and start your 90 days free trial. And I think that, Jamie, during the webinar, I will show some of the features of the premium plan. Of course, the platform is free to use. You can manage unlimited properties, unlimited property analysis. But if you want to benefit from other features, premium features, then you need to subscribe to our premium plan, which is £12 per month or £99 per year. But again, for the attendance of this webinar, you can get 90 days for free, and we will share the links and the coupon code in the chat. So the agenda for today, we start with a brief introduction. Jamie, you introduce yourself. I will introduce briefly Landlord. And then we start to discuss. I will basically ask you, Jamie, for some best practices on how to source properties, what are the best ways you do it, and then some best practices on property analysis, although we will do live analysis of a rental property and also for a flip project, buy to sell. So I believe that some of the tips will be integrated into those analyses. And then in the end, we'll have a session for questions. So feel free to put questions on the chat. If it's relevant, we'll try to answer it as we go. And if not, we will hopefully have some time in the end of this webinar to answer. All right, so Jamie, I believe most of the people here know you, but please feel free perhaps to briefly introduce yourself.
Sure, yeah. I'm not sure what information will be most important for you guys, but I've been investing in property for about a decade now, done around £80 million worth of property deals. I run Aspire Property Group, which is predominantly a property trading business. So if you think of deal packaging in the sector, that's probably the best definition of what we do. We're at the size of about £250,000 a month in that property now. We do about £500,000 a month across everything that I do in property, and been sort of scaling that up full time over in Leeds, but we do it all over the UK. And as Avi mentioned, let me know in the comments, by the way, if you're a YouTube subscriber already. But if not, you can check that out. I try to provide as much free content as I can over on my YouTube channel. It's just Jamie York, and you can see my ugly mug there on the thumbnails of it. So yeah, if you're not subscribed, head over there. It's not like a lot of the other property channels that are very pitchy and things like that. I genuinely just try to add as much value as for free. And then if people want to work with us as an investor or any other means, then you can get in touch and stuff like that. But yeah, really, hopefully you guys would get massive value from that. But in general, that's a short intro from me. And any questions tonight, I'm happy to stick around, try and help you grow as much as you possibly can, whilst utilizing the software through Landlord, and how we can actually scale those portfolios together.
Brilliant. Thanks, Jamie. So let's get started. So the first topic is some best tips to source properties. So if you can share some of your tips when you source properties for a purchase, for buy to let, or even for flip purposes.
Yeah. Okay, cool. So I think there's a lot of different angles to come at this, guys. So I will make the assumption that you're sourcing for yourself. So you're finding deals for yourself, but of course you might be finding them for investors as well. So the only caveat that I'd put in front of the advice is if you are going out there and finding them for investors, make sure you are compliant. You know, it's really important. There's a lot of people that worry about the £800 compliance fees and things like that, but it's really important for investors to know that they can trust you, and vice versa. By the way, if you get to a point and you are an investor and you're utilizing somebody else to find you deals, make sure they are compliant, because if anything does go wrong, not that it will, but if anything does go wrong, you want to make sure that they are kept to a certain standard, that they've got insurance, and that they're covered by the ombudsman as well, so you can escalate things if it does get out of hand. That's really important. So when it comes to finding your best investments opportunities, I think the first thing, and it's really boring, but get really clear on what you're actually looking to do, and what you're looking for. And this is sort of the strategy side of things. I think a lot of people that fail in property, and by the way, an overwhelming majority of people fail in property. I'm sorry to tell you this, but the number one reason is they don't know what they're doing. And I don't mean a lack of education there. I mean, they literally don't have a game plan together. And this is super important because a lot of you will know about buy-to-lets, maybe flips, but maybe you don't know about buy, refurbish, refinance, rent to rent, serviced accommodation, assisted sales, exchange, delay, completion, commercial conversion, industrial conversion, land development, and so on. So there's over 100 different strategies out there within property, and you may have heard of 6 or 7 of them. Now, the thing is, 98 of them will be absolutely irrelevant. It's really about narrowing down what your goals are, what finance you have, and hopefully you're taking notes on this. Your goals are, what finance you have, your risk appetite, and what sort of term you're thinking about. And when I mean term, I mean, are you looking at the next 5 years, the next 10 years, the next 15, the next 20? So once you understand your strategy, it's then looking at your location. So location is the number 2 on the list, I would say. Now, location seems pretty simple, but what you need to understand is saying London isn't you saying a location. Like London's what, almost 10 million people now, which is absolutely insane, right? You need to narrow it down. Like, what point is it Croydon, which is going to be very different to Holborn, which is going to be very different to Dartford in Kent, which is very different to Derby and Nottingham and all of these locations. So you really want to narrow down, and that's going to be based on how much money you've got, and you've got an idea of how many deals you want to invest in, your risk appetite of the area, and of course, are you really focusing on cash flow strategy or a capital growth strategy? In general, the higher the prices, the more capital growth you're going to get. And there's things that come into that, of course, which I'll go through maybe later. But the higher the purchase price, the higher the capital growth over the long term, over 10, 20 years. And the lower the price, typically the higher the cash flow. So strategy, location. Next is going to be the service. Number 3 is service. And when I'm saying service, I don't care if you're buying for yourself or you're finding these deals for investors, you are going to want to talk to investors. My assumption is that you are on this Landlord webinar because you want to be a little bit more active than the average armchair investor. And I might be wrong, by the way, because if you are here as an armchair investor, you just want to learn more, find out who you want to connect with, and then you're going to use a deal packager of some kind to help build your portfolio. But making the assumption that you guys actually want to be semi-active or active as a property investor, you are going to need to raise finance. Okay, now I don't care if you're sat here with 200,000 or 2 million. Both of those amounts, or even, by the way, 0, it's absolutely fine in property as well. But 200,000 and 2 million, they're both very similar numbers in my mind. In the way that, yes, that is a lot of money to have in your bank, but it's not a lot of money when it comes to property. Okay. And how much you grow your portfolio is going to be in direct correlation to how you are going to raise finance. So what do I mean by service? What I mean is, what are you facilitating for the investor? Is it going to be a joint venture where they are getting shared income and shared uplift, but also they take on risk of the investment? That's option one. Or is it going to be that they are loaning you the money? That's option two. Or, of course, are you trading on the deal? Are you getting an investor database that when you find a property that's great, you can, but it's not for you, you can shift it onto your investor? Only then, when you've got your strategy, your location, and service now down, will you build a really good picture of your investor side and it's called your avatar. And I don't mean the really tall blue creatures. I'm talking about the genetic makeup of what's going to make a great investor, your customer avatar. But also on the property side, you're going to get a real clear picture of what you're looking for. And to give some quick guidance on what strategies are working best right now, I'm going to give you three. Number one, really obvious one, estate agents, but in particular, online estate agents. Think Stripe, Purple Brick, Good Move, Better Move, for example, where they have a strong online presence, where they are very good at marketing and getting properties on their listings, but not very good at selling them. Okay, this is as close to them doing all of the work and you getting direct to vendor as it is. Also, right now, the market is slowing down, so you can negotiate some really great deals that haven't been available over the last couple of years. Number two, this is a nice little, not secret, but very untapped market to get some great discounted deals, is lettings agents, management agents. People that are managing buy-to-let properties, people that are managing service accommodation if they do SA, people that are managing HMOs. People don't often think of those to tap into. But think about your small local letting agent that only manages 150 units. They don't have a sales arm most of the time if they're that sort of size, because being a sales agent costs a lot of money for Rightmove and things like that. If they have somebody that has a portfolio of 10, 15 properties, and that person with 10 or 15 properties decides it's time to sell off. We're talking about the old school landlord that owned them 30 years ago. They've gone up loads in value. We're bored of all the rule changes. Let's exit the portfolio. Then that agent is going to lose 10% of their business overnight. So a simple email out, broadcast to every letting agent in your area, explaining what you do, what you're looking for, and how it benefits them. And how it benefits them is twofold. You're going to pay them a £500 consultation fee per property that you successfully buy, and you guarantee that you will retain them as the management agent for a minimum of 12 months. Okay, so estate agents, letting agents. And number three, my favorite, and fairly obvious if you follow me at all, how much it is my favorite, is Facebook ads. Facebook ads, one of the first things you do in the morning, I imagine, is a look at your phone. One of the last things you do at night, if we're keeping it clean, is also looking at your phone. All right. And when you go on Facebook and you engage in an ad, maybe you've noticed this, by the way, have any of you gone on Google, YouTube, or Facebook, maybe watched one ad for like a split second, and then they follow you around all bloody month? Maybe it's me, who knows, right? But when you engage in some sort of ad and you're just followed all the time around, that's why I love Facebook. It's really powerful. You can set it and forget it, and have opportunities coming to you every single day coming in. And we get about, to give you an idea, we spend right now in one of our test areas £100 a day, which is a lot of money. I get it. If you're just starting out, and that will get about 15 direct to vendor leads every single day. So if you think about that, what is that? £100 to 15 divided by 10. So it's about, I don't know, maths are awful right now, about £7 a lead, something like that. That's pretty cheap to get a direct to vendor conversation about selling their property. So I know that was a blah there, but hopefully that's somewhat helpful. You can let me know in the comments, or tell me to shut up. Either way is fine.
Yeah. Yeah, great tips, Jamie. And yes, feel free to put your comments on the chat, or if you have questions. In terms of like actually find like properties, we have on Landlord, and perhaps Jamie, I will take like 2 minutes just to introduce the main functionality of Landlord for those that are new to that. So we have three main sections: invest, manage, finance. And the invest section you can find on the property sourcing, listings from agents that basically being uploaded every day to the platform. And you can find some details about the properties and what finance is available to purchase the property, and the analysis in terms of potential return if you're using this property as rental property or you're going to flip it. I know not all the properties are relevant for flip, but it's automated here. So you will have the metrics in case the property is relevant for a flip project. Then you have in the auctions, listings, basically auction lots from online auction houses. And you can see also the auction date. You can add it to your watch list. This is part of our premium plan. And if you add it to the watch list, you can get reminders before the auction date. The property lists, you can type in address and then put a radius, and then based on that, you will get some properties, but then you need to select the category. So it's also a way to find properties in different categories. And something new that we released just this week, by the way, JB, it's a new thing, sourcing alerts. So you can define, so if you add properties to your watch list, you can get alerts when price is basically increasing, price decrease, of course, the auction date reminder, and also you can define your own criteria and get notifications for new properties that are being added to our different sections. So basically, you can find the properties here and start the analysis that we will show you in a sec how you can do that. Then on the manage section, this is the place to manage your existing portfolio. So in my portfolio, this is the place to put all your property details in one place. We store over 150 different data items on each property. Although there are no mandatory fields, you can just start with typing the address and then tweak the data afterwards. And it's basically separated by sections. So you have the general information, the mortgage information, enhanced property details, data about your utility suppliers, landlord insurance. You can put end dates here. And for each due date, you will receive alerts as well. And other important data points, you can also manage more than one owner in one landlord account. And you can apply different views and export the data. Then you can also manage your tenants and tenancies. I'm doing it very briefly because the main focus of this webinar is deal analysis, but just for you to know that there are a lot of functionality to manage your existing portfolio. The payment schedule, this is the place to manage your rent collection. My documents, also a new feature, also part of the premium plan. Very important to manage all your relevant documents for each property in one place. And also you can manage your personal documents for each owner, so you can share with a broker, lender, and you can also create a package to share with others. So this is very useful. You just need to select the property, then select the documents you want to share, create package, and then the platform will regenerate HTML report with some details about the property and the documents, and you can share it with others. So it's also something that is very important, all the documents in one place. And the cash flow section, this is the place to manage your income and expenses over time. On the transactions page, you can link your bank account. This is also part of our premium plan. And the platform will retrieve the transactions for you every 24 hours. And you can also generate some reports, P&L report, property breakdown, expenses breakdown, income breakdown, and tax report. And last thing I will show is the interactive report, which provides you with a high-level overview on your portfolio. And you can just go property by property. You can change the value if you think it has changed. And you can also see the performance of this property and the how it compared to other properties in your portfolio. And the last section is the finance. So Landlord, we have two main services, one bridging finance and the other one is mortgages as a digital broker. So you can see the rates that are available for you and you can start an online process to get your mortgage and review your mortgage illustration as a first step. And then you can manage your mortgage application online and see all the steps to completion as well for bridging finance. So this is in a very high level brief, and Jamie, now let's start analyzing some deals together. So we will start with perhaps with the rental property. So Jamie, you gave me this property for rental purposes. So let's go to the invest part, rental, click new. So it starts with typing the address. Then the platform will provide you with some initial information about this property. And Jamie, do you want to say like a few words about this property?
Yeah, so first of all, that was really cool what you just showed there. Like, you guys are absolute wizards. I don't. I was talking to a team member the other day. Sorry, guys, sidetrack. Where they were asking about how parts of the economy works in our favor for property, and I said to them, sometimes you just need to appreciate what it does for us, and not sort of worry about how it does it. And I kind of think that sometimes about the platform. Like, I don't understand how you guys extrapolate certain information a lot of time, but it's really cool having everything in one place, being able to sort of source them, understand the numbers for funding, the ability, all of that. So yeah, just thought it's worth saying that as you're blowing my mind a little bit. But yeah, with this property, so this is a buy-to-let. I'm going to give you some advice, guys, around buy-to-lets. Is think long term. If you want to get rich quick with property, buy-to-let is not the way to do it. The only way of really making significant money quickly is with an active income stream. Okay, so the active income stream is going to be your job, maybe a business within property. That would be deal packaging. You know, like, this is long term. So for me, I'm 31, so I've got hopefully many years ahead of me. But even if I were 80, I'd still be buying property because I'm thinking about the legacy, the long term, and things like that. So with that in mind, one big mistake that I constantly see is people get obsessed with getting a discount on a property. And yes, getting, you know, a few grand off, 5 grand off, 10 grand off, etc., is amazing. But people focus on below market value too much. But you have to remember, if somebody's selling below market value, there's either a problem with the property, a problem with the person's situation, or a problem with the location. If you are finding a solid property in a good capital growth area, you're not going to get that. All right. So I just thought it was worth saying that. Look, most of your wealth through time is not from a discount that you get or even the cash flow, is capital appreciation. That is how the rich get richer through property, is through capital appreciation, the value of the property going up, and then taking out debt, which inflation erodes over time. Okay, this isn't the time for an economics lesson, but I thought it was worth just saying that. So 46 Pearl Street, this is a solid deal. All in all, it's about 90 grand purchase price. This is up in WF17. It didn't need a huge amount of money spent on it. It needs about £6,000 if/when the tenant moves out.
Jamie,
okay?
one second before. So just people understand, like, basically you need to put like 2 data points as a start: the purchase price and the expected monthly rent. What would be the expected monthly rent?
Yeah, about 550.
All right, okay. And then basically the platform will generate the initial metrics for you. But of course, starting this point, you just need to tweak the data. So let's,
it's exactly. So you know, you might put in some additional costs like the refurb, about 6,000, and then closing costs, which are going to be like your legals, bits like that. You know, yeah, your most basic ones. There you go. About 1,800 will be absolutely fine. Now, occupancy in this area is incredibly high. You know, 95% occupancy is pretty bang on. Capital appreciation over the long term in that area in particular is over 8%. But if I always say to people, look, even if it's higher than what I'm about to say, still leave it at about 5. If you said 5% annualized capital appreciation, you're going to be there over the long term, that or higher. And I'd much rather you be conservative with your numbers rather than overzealous, if you like, and then it all comes crumbling down. Now, if you go down on this,
you can see in this postcode that historically it was like around 5%. So it's also
it's about right.
For that.
Yeah. And when you go in and do more analysis, by the way, guys, when you break down an area, what you'll notice is it will give you an average for the postcode, but you also need to then like use this as your first indication. And then when you delve deeper, you'll find that semi-detached is different to flats, is different to terrace, is different to all of the different types. So why is capital growth so important? Well, if you look at the top, you'll see like some first year metrics and long-term metrics. So let's focus on first year metrics first, because this is what everyone looks at. So your net cash flow, obviously people love some cash flow coming in, but honestly, that's not really where you're going to make your most of your money. And you'll see what I mean in a moment, but it's nice to know it's there. You've got a solid yield there, you know, 6.5. You could probably get more rent in that property, but I think 550 is quite reasonable. And you'll see your cash on cash return is about 6.5%. So would we say that is absolutely crazy high? No, probably not. But is it a bad deal? No. So here's why I think getting something is in a really good area is so important, is for the capital growth aspect. So when we look on the right-hand side, you can see the long-term metrics based over a 10-year period. And there's a lot you can look at there, but the one I really look at is the IRR. The IRR is the internal rate of return. Okay, and if you hover over the I, Avi, I think it sort of gives a bit of a estimation, if you like.
And it takes into account it will take into account the property appreciation over the years. The rental increase, basically factor in everything for the long term. So
exactly. And this is really important, because you'll go, right, 6% a year, but is that really how it works out? No. So a lot of people don't know this in property. In fact, you'll hardly ever hear people saying IRR or the internal rate of return, but it's very, very, very normal in professional real estate. Okay, so when people are investing to a high level, IRR is what they're looking at. So I've done this down. So when I'm talking to my investors, I always say what you're looking at is the combined return. And combined return for me is factoring in the whole investment. People look at just the cash flow, but that's not the investment. Okay, if you were just buying property for the cash flow, there's plenty of stuff that competes very well with property. But the fact that you've got capital appreciation and leverage, i.e. the ability to take on a mortgage, that's what makes property the best investment available, outside of maybe unicorn stocks and stuff like that. That's not very much there. So combined return is what we're really looking at. Okay, and I think it was it about 13% at the top? And then over a 10-year, 13.56% return. And over a 10-year period, that's compounding to a long-term ROI of 196%. Okay, so your yearly IRR is 13.56%, but your 10-year is 196. So if I said to you guys, listen, if you have, and I think somebody put it in the comments there, delayed gratification, if you appreciated the long-term view of property, and I said to you, I can get you property that gives you a 19.96% return, most people would think it's a scam, right? But actually, getting teens returns and that IRR of 13% annualized is very typical in a strong area. And so for me, when I'm looking at how to analyze these properties, a lot of people, and it's usually the novices, get obsessed with cash flow. And I think trainers are a lot to blame. I know I train people as well, by the way, but trainers are a little bit to blame, because when they're selling their courses, it's financially free through property and all of that. And it's like, look, property is not really about quitting your job. Yes, it will help support you and things like that, but property is truly about generational wealth. It's about making your kids multimillionaires. Okay. And of course, you could be a multimillionaire at the same time, but it's about that IRR. And what Avi's gone in there is a full breakdown of all of the numbers. But for you to understand, if you've never heard of that, think of it as combined returns, which is factoring in rent, capital appreciation or capital growth, and the debt, i.e. leverage that you're taking onto that.
Right. What about finance, Jamie? Would you take like for this specific property buy-to-let mortgage?
Yeah, so with this property, so again, sorry, I forgot to talk about loan details. So typically at the moment, you're seeing 75% loan to value properties. Now, just so you know, guys, you can get up to 85% loan to value. I'm not a financial advisor, but my opinion is to just stick with 75%. You're going to get way more deal availability, way better rates, and this is not the time to over leverage. At all. Okay. If you were at the bottom of a market and about to start going up, maybe I'd be saying something different, but we're clearly not at the bottom of the market. So 75% loan to value is very typical. 5% mortgage is fine. Right now is, you could get 5.1s, 5.2s. I think if we have a look on here, it will give us info 5.4. And today, by the way, just so you know, some up-to-date news, one of the banks has just announced today that they are starting to reduce their interest for the first time in a few months. So there's that's usually a strong prediction of a bit of a turn. Base rates are still likely to go up a couple more times, by the way, but it's a very good indication of that. But yeah, 75% loan to value, around 5-6% for the mortgage rate would be absolutely fine. And then your operating expenses completely down to you. 10% for an agency fee, service fees, and things like that. And ground rent is going to be only if you own a leasehold property, most typically a flat. Freehold properties, you don't pay ground rent or service charge. And then you decide whether you're going to factor in maintenance or not. I usually decide this based on if I've just done a full refurb or not. If I'm taking on somebody else's property, I'm probably going to factor in some maintenance and factor that into the purchase price. If it's one that I'm doing a refurb for, I know the maintenance is going to end up being a lot lower.
Yeah. Would you put like some buffer, other monthly costs or something like that?
Not really on top of the management and maintenance. Now, let me say it depends. For a boring vanilla buy-to-let, which if you follow me on YouTube, that's what I'm obsessed with. No, I wouldn't. If it were something like I'm running this as a serviced accommodation or it's a large HMO, then yes. Sometimes, guys, you can be so conservative all the way down that you go, oh, I'll think about this. And you think about every single thing that could go wrong, that you end up pricing yourself out of every single deal. And it just gets a bit ridiculous. So have a system where you're being reasonable with your prices. And like the cool thing about, so you don't cut yourself out of deals. But the really cool thing about property is it's incredibly forgiving and as an asset class. So say, for example, it dropped 10% over the next year. Who cares? I don't know about you, but I've not met many people buying a buy-to-let just to sell it in the next year or two. It doesn't happen, right? Now, most of you, your exit is death, right? As in, like me, I am buying properties and I'm just hoping my kids don't screw it up and lose it in their first divorce, right? So it's having that mindset and then understanding that it's not about timing the market, it's about time in the market. Since the Doomsday Book in 1086, which is around 1,000 years, there has never been a 10-year period ever where property prices have gone down. All right. So good. It's good being conservative, but I don't want to price myself out of deals. I want to take advantage of deals and then grow with the market as it moves forward, knowing that the upsides benefit me a ridiculous amount. And by the way, the downsides also help you in ways that you don't really think about. But when the value of your portfolio goes down, nothing happens in reality, nothing at all, because you're still getting rent. In fact, you get more rent when property prices go down, but conversation for another time. But you can also offset all of those paper losses against any profit as well. So there's massive tax savings. But yeah, those are all the things that I would be thinking about.
What about the postcode, Jamie? Would you look at the postcode? So, by the way, in Landlord, you can go to the postcode information page. On the premium, if you use the premium plan, you will get unlimited postcode information searches on the basic plan 3. And here you can see, 5-year capital growth in this area, in this postcode. You can see the property demand, if it's a seller or buyer market, some analytics about crime, rental demand, price per square foot, demographics in terms of politics, commute method, age distribution, data about schools, and other important stats. How you assess the area, Jim? I know that basically perhaps you're familiar with the areas that you buy properties in, but what is your take on postcode assessment?
Yeah, I think it's really important. So being honest with you, I use postcode data less and less now, but that's because I've done all of the research. I know the areas, right? But there's a couple of things I would be thinking about, guys. Is number one is the crimes per 1,000. So crimes per 1,000. First of all, quick tip, because I know you're all going to do it. You're going to search your postcode where you live, all right? Because that's what everyone does. Be prepared. There's crime in all areas. 169 crimes per 1,000 is not high, believe it or not. Okay, that means there's 16 in 100 criminals in your area. No, it's not high at all. It's very average for an area. Once it gets past about 230, then I'd start being like, that's a bit of a rougher area. That's number one. Next is tenure of property. So tenure of property is like the demographics, the breakdown. So I don't know if it covers it here. If you scroll down, you've got demographic. Oh, you got schools as well. So demographic, the tenure of property is about the ownership. I don't know if you've got it. Let's see.
You can add this if you don't see it here. The tenure, if it's like a freehold or leasehold, you mean?
No. Scroll to the top, see if it is there. But if not, if you can get this data, you'll definitely be able to get that data, Avi. So that would be amazing if you are able to chat to the guys. Hey, there you go. That'd be good. Let me tell you why it's important though. So tenure of property is the ownership in an area. If you want to write this down, guys, really important. So average in the UK, 30% of property in the UK is owner occupied with no mortgage. 30%. 30% is owner occupied with a mortgage. So total owner occupies around 60%. Private landlords represent around 21% of the UK. And social housing is about 19%. So 30% owner occupier owned outright, 30% owner occupied with a mortgage, 21% private rental sector, 19% social housing. Now, knowing that data on its own doesn't really tell you too much, but it's how your area compares. So if you are looking in an area where it's 70% in total owner occupier between outright and with a mortgage, that would indicate that people want to live there and people have got the money to buy there. And what that indicates for you is a much stronger capital growth over time. Okay. Whereas, let's say the area has only got 50% owner occupier and social housing in the area is 30%, then that's going to indicate a less desirable area for people to live and own there. And it's a much higher social tenant there. Now, it's nothing against social tenants at all, but that usually means crime will be higher in the area. And if it goes much higher than 30% in the area, that's when you're going to struggle getting mortgages and stuff like that. So I think that's really important. The final one is schools. That would be my third one that I absolutely love, is what schools are in there, and are there at least 2 schools that are good or outstanding in the area? And if there are, which you got 4 there, then it's good. And you have to bear in mind, the reason I do that is for two reasons is, well, one reason all in one is there going to be family demand in the area? I want people that are going to move into my house, make it their home, and want to be there for at least 5 years. Somebody with school kids pretty much guarantees that to happen. Okay. So yeah, that's the sort of macroeconomics that comes into the area.
All right. Good stuff, Jamie. So now let's analyze a flip project. So for that, I will go to invest, deal analyzer, flip. Let's start a new one from scratch. And I will use this address. All right, so perhaps a few words about flip. When basically you would consider to do like, if you know, flip means you purchase, renovate, and then sell. And the main purpose is to do profit for the short term usually.
Yeah, absolutely. So this one's flips are really cool. So first of all, it's not just the numbers. And I think that's really important to say, because some people will find a property that based on the numbers looks great, but it's in a really rubbish area. And so it's going to sell no matter how much money you're making. It's going to be really slow. You're going to feel stressed with it. So you want competition. If you're the only one going for the property, that's probably not a good sign. I want competition because it shows it's going to sell, or it's a good indication it's going to sell. And I think it's reverse engineering your psychology on competition. So a flip is, as Avi said, it's going to be refurbishing and exiting the property on a sale. This is, from a finance point of view, by the way, not where you would use a mortgage, you would use bridging for this. And whenever I'm doing these, and I can say this with confidence, I actually use Landlord. We just refinanced out of 3 last month, I think, something like that. Sorry, Avi, you got your money back now. Yeah, bridging is going to be really cool for this. Bridging, by the way, is really a short-term finance solution for your exit. So you might exit onto a mortgage, or in this case, exit from a sale. So I'm really looking for a minimum of about 15% margin on a flip. Okay. And right now, if I'm doing a quick flip, which I would consider a 6 to 9 month flip, I'm also factoring in, dependent on the area, a 3 to 5% drop in the end value. Okay. Just so you're aware. Now, again, that might kill some deals, or it forces you to renegotiate them. But the reason I'm doing that is there's no point basing my numbers on today's prices when I think in the next 6 months, prices in some areas might be a bit softer. In the areas that I'm buying them, the property prices don't really drop, but the speed of the market will slow down. And therefore, it's the same thing, because I'm going to have another couple of months of finance costs. Hopefully that makes sense for people. But 15% is the margin you want to be looking at. And for me, if I'm not making 15 to 20,000 pounds in a deal, I'm not going to bother with it, even if I'm getting 30% return, and that represents 5 grand. It's just not worth the time or energy. All right. So it's that balance between the pound sterling profit and the percentage profit that you're getting. All right. So this deal, let me go up the numbers. We got this for 129 grand. It's a pretty solid deal, this actually. So this one isn't. I'm gonna correct something that Avi said and I said. A flip isn't always buy, refurbish, and sell. A much better way of thinking of a flip is buy, add value, and sell. Okay. And there's multiple ways of adding value. And I think it's a real thing. So for example, with this flip, the refurbishment cost was £500. Hardly the refurbishment of the Century there, right? We're talking a deep clean and a couple of panels and stuff like that. But what I did spend on it, which would be I guess, additional costs here, and maybe you put this in the works plan, is this is a flat. Now, if anyone knows me, you'll know that I don't really go to for flats because they're leasehold. I prefer freehold properties, but that's only for long term. So leasehold properties, sometimes you have a short lease. Does everyone know what leasehold and freehold is here, by the way, guys? In general, leasehold means you don't own the ground that the property sits on or the sky above it, right? So you pay a ground rent usually, and if you're in a big block, you'll also pay a service charge. But something else happens is because you don't own the freehold, i.e. the ground, you're essentially, that ground rent is you're renting the access to get to your flat, okay? Once you get to a certain amount of years in lease, usually about 60 to 70 years, it's really hard to get a mortgage on that property, okay? I'll say that again because it's really important if you've got flats near you where you can make some real nice cash, okay? So if the lease length is less than 70 years, people are going to struggle to get a mortgage. So what we did with this one is we bought it with bridging. And we're not going to get into the technicalities of this, but you need to start the extension of the leasehold before you officially buy it. Most people don't know this, but if you buy it and then you try to extend it, you have to own it for 2 years before you can extend it. But here's how you get through that with a loophole. When you're buying it, you get the vendor of the property to issue a Section 42. Make sure to write that down. Really important, guys. A Section 42. All they're doing, they don't spend really anything. It's just in initiating the lease extension, which means you can buy it and extend it straight away. So you completely eradicate that 2-year waiting list. Section 42. Okay. So extending the lease on this cost £22,000.
22,000?
22,000.
Right. Cool.
So 22,000. Most of the time when you extend the lease, guys, it's going to depend on the area, but it will extend to whatever the local area is. So I think this one extended to 125 years. Okay. So that's it. So we've got that. Again, the loan details, we end up getting, I think it was 75% on this as well. No, Keishan, not Section 24. Section 24 is to do with taxes on buy-to-lets that's in your personal name. This is called Section 42, 42. Okay. So bought it 129, spent 22K extending the lease, £500 on light works. And then, there's some additional things in there. So you can put in some additional things. We paid 1.2% on the agent fee. This is really just an exercise, but we can put it in if you want. And we ended up selling the property.
And 1 second, Jamie, just I want to...
Sorry, I'm going too quick, aren't I?
Just the bridging versus the cash. So basically, the bridging you took on the purchase price, 75%, and was like,
yeah,
makes sense, the monthly interest rate.
Yeah, I think we paid 1% a month.
Right.
And an arrangement fee of about £2,000, something like that.
Yeah. All right. Monthly, you had some monthly costs during the project?
Yeah, so we had where are we? Is that monthly? Yeah. So we had, if you're in other monthly costs, if you put about 200 a month, and that was ground rent and service charge within that. And then we had about £20 a month for insurances. And we had a 6-month delay on utilities. So we didn't need to pay any utilities.
All right, good. And then, so now basically what was the sale price?
We sold it for 195,000.
All right, nice. Did you pay any commissions to the agent?
Yeah, 1.2%.
Two. Any other sale costs?
Legals, which were about £800.
Okay, so all in, now let's see on like the length, you see like how it impacts because of the loan costs, because you pay 1% on the loan every month.
Mhm.
Increase your profit if you know, it depends on the length of the project. So what was the length of your project?
5 months, yes.
Well, okay, 5 months. Yeah, so you reduce basically the loan cost. We, by the way, bridging, we allow the user to repay early after 3 months without any penalty. And also we have now a new product, dynamic product, so you can pay low interest rates if you repay the loan after 3 months, then it's a bit high after 6 months, after 9 months, and after 12 months. We have different rates to encourage the borrower to repay the loan early. So yeah, so this is like for 5 months. And so yeah, so here basically 44%, almost 45% ROI.
Yeah, not bad, not bad. And the key thing there, guys, is, as I said, it's not just about the percentage return. It's also about it's also about getting the net return that you want in there as well. Hopefully that makes sense.
Yep.
As like that 20,000 that I mentioned is really important to make sure you're getting those minimums that you need as well. But yeah, a couple of people asking about like the how to find out roughly how much it's going to cost to extend. If you literally just Google lease extension calculator, and it will come up with several of them, and they're relatively accurate, to be fair. So leaseextension.org. I'll just put a link in now, guys, and you can just copy it.
So it's like another idea for a new feature. So sorry, write it down.
Yeah.
Calculator. All right. Okay. All right. So yeah. So here again, you can go to the prospect report to get a summary of the deal. Something from like also under the premium plan, you can export a PDF report. So it's a design report. It's also available for the rental analysis, and you can get a nice report for this deal, so you can share with others. And yeah, I think so. Now, Jamie, basically, I think that if you have a few more minutes, we can get some questions. So if you want to ask question, you can raise your hand or just put it on the chat.
Yeah.
Let's see if we have some. What is the best way to find flip properties? Is it auctions, Jamie?
Auctions are really great. So auctions, especially now, by the way, you can pick up some really good deals. The way I use Landlord for this will really interest a lot of you guys. Is the biggest problem with going to auctions is knowing that you've got your finance available. Because what you need to understand is when you go into auction and the hammer goes down, most auctions you have exchanged on the property. So what you can do is if you use the on invest and auctions, which Avi's on now, you can search your area, you can flag it, and then when you talk to them, some sites will show how many people have downloaded the legal pack. And that's a really good indication of interest there, right? If not, you can talk to them. But what I would do is secure the finance. So get an idea that you would get approved for the finance, and then you get in touch with them before the auction even starts and put in a pre-auction offer. And nowadays you're finding more and more people accepting that and making it happen. So that's really cool. And yeah, so auctions are one of the strongest ways right now.
If you click proceed and you fill in this quick questionnaire, we usually can provide heads of terms within 24 hours if we receive all the documents, and then you can use it for the auction house or for your agent. So yeah. And you can also to the auction house page, of course.
Yeah. Exactly. Yeah, I think that's amazing. And then there was another bit on there, Abby. If you go on that sourcing alerts, which I've not seen yet on the left hand side, because as you said,
Very
it's
new,
pretty new.
very new.
This is on premium, yeah.
Yes.
Right. Okay. So you can see price decreases, auctions. Uh, scroll down a little bit, Abby.
Yeah. So here you can basically define your criteria. So you can put like in address, then define the radius. You can also put some, price range on the property.
Interesting. So, Avi, does this work? Just so I get an idea of how this, I don't need like the coding and stuff like that, but does it scrape the portals and like extrapolate based on like certain words that are in there?
You mean in terms of, yeah, so we have some algorithms that are doing that. And this basically will alert you when we receive new properties. So when you receive new properties on market listing, so as you can see when basically we received this from the agent, and also on the auctions, every day basically we get more properties. Basically here we don't put this because we have
So
the
I've got an idea that would
right.
make this amazing for people. The platform's amazing already, and I might be putting you in this, and the guys are going to kill me. If you could extrapolate the word probate or repossession, that would be a game changer for people for being able to find really good deals quickly and being
Probate.
able to utilize bridging. So if they're able to do that and scrape from Rightmove to Zoopla, that would save people hours
Yeah.
all
We
the
have
time.
so we have this feature. Let me see if you see here repossession.
Oh
Um,
yeah, repossessed at the top, right at the top, and then
all right.
wow, that's good. And then
Give me an address that it doesn't
yeah,
matter.
just wherever.
So yeah. So this is also part of the premium plan, and I remind everyone that you get 90 days free if I just it will be available just by tomorrow. Sorry, if you can put again the links for new user to sign up and get the benefit, and also for existing users to receive the coupon. And it takes some time, but let's see if we will find something. Um, let's give it a few more seconds. No, it's always like this. When you demo something, it will not work. But let's
That's
see.
nothing. I tried to show someone something the other day, and my laptop crashed just as I was doing it.
Oh, okay, we got some. So yeah, it takes time to search, but then basically this is like the category repossessed properties, and you can find here. We don't have a lot of information about. You can go directly to the property page on Rightmove.
Nice.
All right. So
Yeah.
why
Yeah,
repossessed?
that's a game changer for people for sure.
Why repossessed is so important? Like because you can find like market below market value properties.
Yeah, when you're going for repossessed property, guys, you need to be buying them cash or bridging, for sure, because it's all about speed. Like when you get your offer accepted, you want to get it completed like that. It's very similar to auction, but you're not locked in. They will have all of the legals already done. They could complete tomorrow if your solicitor on your side's quick enough, right? So you need to be really quick, but it's just before when this online is repossessed, it's just before it's gone to the bank. And actually, they're looking for speed of sale rather than getting the best price possible over 6 months period. So you're able to lock in some really great deals at some discounts as well. And for flip properties, it's going to be great because most people that have allowed their house to get repossessed, the quality of the property is not left in a good state. And so that then deters a lot of your main competition, like open market buyers, because it's too smelly, too horrible. They can't visualize living there. And then you're able to put in a bit of a cheeky offer, go in there quickly, nail the property, and then get it exited. So yeah, that's why I love repossession properties.
Okay, so you can use the property list feature page from the property sourcing. This is part of the premium plan. So take advantage of the 90 days free, and you can use this feature. Let's see if we have any other questions. What do you think of building a portfolio with flats? Who asks?
I don't like flats, so I'm probably not the person to ask there because I just don't understand why somebody would buy a leasehold property when you can find a freehold property. That being said, so that's building a portfolio. If it was buying and selling, I'd be absolutely fine with it. Or I got a ridiculous price on a flat, so I got like, and there's another story for it, actually. I'm not going to open a can of worms. It's another time. So yeah, in general, I'm not a fan of flats because I don't like leaseholds. I don't like the fact that I own something, but somebody else owns the land that my thing sits on. Not really a fan of that. So the only way that I do use Landlord, sorry, I just read Landlord there. The only time I do utilize flats is if I'm buying the block. So I've just bought or buying one now that's a £5 million block of flats, and that's because I own the freehold then. So that's the only time I personally would build up my portfolio using flats. But if you talk to somebody else, I'm sure they share a different opinion. It's just for me, I don't like buying something that I then don't own all of.
Okay, good. Jackie says, they ask, honest opinion, Jamie, please. Blackpool town, good or bad? We're doing buy to lets and live local.
Good in general. Again, the only thing with Blackpool is HMOs, you need to be quite careful. There was an individual, I won't mention his name, about 10 years ago that kind of ruined the HMO market, maybe even 6 years ago, ruined the HMO market there. So they've got really tight regulations there on room sizes and valuations around HMOs. So don't be expecting commercial valuations on HMOs in Blackpool. And actually, a lot of lenders in the HMO space won't lend. But if it's like your boring vanilla buy-to-lets, 2 to 4 bed houses in Blackpool, I think it's going to be really strong. I think it's a softer market right there now, which is good, by the way, because you've got an attack plan. You might be able to get some discounts there and stuff like that. But over the long term, that's picking back up. They've got some big development plans over in Blackpool. And I say big, about 30 million, which is pretty big investment for Blackpool, the size of it, etc. And it's really strong renter.
Which areas of Leeds would you look at investing in?
Don't go into Leeds. Terrible area. Terrible area. No, I invest in Leeds. In general, it depends on what you're looking for. So if you're looking around, there's two types of buy-to-let properties that I would look for in Leeds. You've got your 90 to 120 grand range, which is going to be your South Leeds areas. And even those, they're turning into more like 140, 150 areas right now. So Hunslet, Holbeck, LS11, LS10, LS9, even Hare Hills, which if you look at Hare Hills and you Google it, is a rough area, apart from the areas that's not. So you need to know the streets if you're going to buy in Hare Hills, because one street will be terrible and the other street will be one of the best you ever make. So South Leeds in general is amazing. If you look at the South Bank development, right now, it is 350 football pitches large. It's the second largest residential development in Europe ever. So anything around there, it doesn't take a genius. That's like a 20 to 30 year development plan, and legal in general, the insurance company own it all. If you want to go up the price bracket, anything around sort of the Meanwood area, Chapel, Allerton area, areas like that, they're going to be really strong, and you're going to get some real long-term tenants paying there as well.
Right. Yeah, there's so many questions. I'm not sure that we can address all of them. Jamie, if you can answer a few more.
Yeah, I'll tell you what, I'll look at them and just go through.
Yeah, just take the ones that, in the meantime, I will answer someone if we provide bridging finance. So yes, we have our own lender, which also Jamie used. So you can just go to the finance page click on bridging finance and start the process. Every month we run some kind of a promotion. This month we provide £500 promotion, and if you're on our premium plan, you can get also other benefits. So we get £150 more bridging arrangement fee discount. So yes, we provide bridging finance, and more than that, not as a broker, we are the lender. And also on mortgages, you can apply online to get your mortgage illustration, and then start an application with the lender and track all the status on Landlord. So this is all available in one app, and the nice thing is that you can source properties, analyze the deal, and in one click you can also click on finance this deal, and you will see what terms you can get for bridging finance or for mortgage. Yeah, so Jamie, if you have a question you want to answer, yeah.
Okay. Would you recommend to buy in a personal name of the spouse if the spouse is a basic rate taxpayer and creating a declaration of trust rather than buying in a limited company? And what's the exit strategy for interest-only mortgage? Okay, I can't give financial advice. I'm not financially qualified at all. In my experience, you can spend so much time doing jiggery pokery to save an extra few quid. Is probably better keeping it as clean as possible. So in general, I'd just buy them in a property company. But I can't give financial advice, not qualified. What's the exit strategy for interest-only mortgage? Death. Genuinely, I mean that. Like, I never intend to pay off the mortgages at all, ever. I think it's an absolutely ridiculous concept that's just drummed into us from an early age. It's like our number one aspiration, isn't it, is I finally have paid off all my mortgage. And I'm not mocking it, by the way. I think that's an incredible achievement, but it's very poor education that we have around finances. Like, paying off your mortgage is one of the worst things you could ever do if you're an investor. Think logically about that. You pay like a few percent on your mortgage, and then you go and raise finance at 12% a year. Like, that makes no logical sense when you think about it. The exit strategy is death. And then you can get insurances on it as well. So if you want it to all be paid off when you die, so that your kids get it debt-free, fine, do that. But honestly, when I have kids, I'm going to educate them properly on how to take on the finance, how to run the portfolios and everything like that. So then they will refinance onto a new debt plan with them. That's all that happens, by the way. You die and they have to get new finance on it, just like normal, and it carries on. So yeah, my exit is death, and hopefully my kids will die with them in their name, and their kids onwards and onwards and onwards. So it's about the long-term generational wealth. Where do you account for stamp duty in your deal analysis for flips in Landlord? It was already on there. So on the left-hand side, when Avi was filling it all in, there was a button that just ticked a box to say additional property. So additional property, when you tick that, it means investment property. So whenever you buy an investment property, you tick that box, because in the eyes of HMRC, it's known as additional property. Okay. Are you pulling in for property data? Yeah, a lot of Landlord extrapolates, invests quite heavily in property data and the algorithms, as well as extrapolating from other sources as well.
Right.
HMOs in Newport and Cardiff area. Yeah, I like South Wales and I like HMOs, especially with the added regulation recently to buy-to-lets, which won't last long term, by the way. But HMOs will be absolutely fine, especially in the Cardiff area. And you might want to look at serviced accommodation if you are central as well. Jackie, thanks so much. Love your channel. You got started with buy-to-lets. Amazing. I'm really glad you got value, Jackie. And hopefully I'll be providing more. Would you recommend mortgaging at the current rates? Again, I can't give financial advice, but I'm going to give you some very basic advice here. Okay. If you're lending is lower than real inflation, and I'm not talking about the advertised rate of inflation. We all know real inflation is a lot higher, right? Because you've also got stuff called shrinkflation and stuff like that. Has anyone ever bought a packet of crisps recently? You remember when you were a kid and it was a nice full bag of crisps, and now you're basically buying a bag of air, right, for the same price or more? That's called shrinkflation, where it's the way they're getting you to pay more money is not by increasing the price too dramatically. They reduce the amount you get. Same as Coke bottles have got smaller and smaller, stuff like that. So in general, if inflation is higher than your lending, you are getting paid to take money. Now, I know that's a really hard concept for people to understand, but inflation is the erosion of the value of money through time. So if somebody is giving you 100,000 today, and it's 10% inflation, in a year, the true value of that 100 grand in a year is the same as 90,000 pounds today. Does that make sense, guys? Just nod those people on camera if that does make sense. Great, okay. So then if they are only charging you 10%, which obviously mortgage is lower than that, then you're cost neutral in real terms. Okay, hopefully that makes sense. So the answer is yes. But also because inflation has a positive impact on the value of properties. The higher the inflation, the pricier it is to build a house. Think logically about this. The higher the price of bricks, the higher the price of labor, the higher price of wood. So if it costs developers to more to build a house, then they have to sell it for more in order to make their profit, which pushes up prices. Of course, if it gets too high and people can't sell them, then what do developers do? They stop developing. And then we've still got all this demand in the marketplace with a lack of supply. What happens to purchase prices? Goes back up. Okay, so yes, absolutely. Can't get financial advice. That's just my opinion, but I personally will always be taking on lending. Honestly, interest rates could hit 15% and I would still use other people's money. 100%. Because I want to be worth hundreds of millions. And me in 20 years is not going to look back and go, damn, really didn't like making zero cash flow on those properties for a year. I'm going to go, great. Nobody was ambitious enough to take advantage of that. And I built another 10 million into my portfolio. Okay. In general, you can pretty much take Warren Buffett's ethos, be greedy when others are fearful and fearful when others are greedy. It's amazing how the market's been going artificially crazy over the last couple of years, and everyone's like, buy, 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 buy. But now the market's actually soft and we can get some crazy opportunities, and now people are getting nervous. Okay, so it's the time to take action is right now. Jamie, if we buy it to let now on high interest, can we remortgage in 2 years? Yes, you absolutely can. And not financial advice, but pretty much guarantee it's going to be lower rates, even within a year, by the way, much, much lower, but definitely 2 years. So just make sure there's no early redemption charges. Stop me at any point, by the way, Avi, I'll just keep going. Jamie, what strategy do you recommend in the current market where a lot of higher value properties are not passing the stress test and therefore you need to leave a lot of cash in the deal to secure mortgages? Yes, very much like when there's a strong wind in the forest, it's the leaves at the top of the tree that blow away first. Okay, and it's very similar in property. When the wind is blowing, which it is now, it's the prices at the top that feel the most pressure. If you're investing, guys, in the range of that sort of 80,000 to 300,000, you're going to be very safe in terms of price fluctuations. Okay, so if any of you are investing in that price range, the perfect range would be that 130 to 160 range. That's like the sweet spot of pressure from people selling to downsize and people wanting to get into the market. So that's the safe pressure point. So buy-to-lets are going to be absolutely amazing. And then I want to have a creative exit. I strongly recommend everyone looks at educating themselves around lease options, especially. I think there's 5 million properties that are coming up to their 5-year fixed rates in the UK this year. What that means is you've got 5 million homes that when they bought it was at 0. fuck all interest rates, so paying next to nothing on their monthly rates, and now they're going to be coming out at 6-7%. Okay, so there's going to be people going into that repossession progression stage, so great deals coming up, and of course negative equity. So if you can learn how to negotiate great deals for a long-term outlet, buy to let, and those lower value areas, and apply lease options, you're going to get some great properties.
Maybe just one note. So if you want to get some advice, so you can schedule a call with our mortgage advisor. I will share her Calendly link. You can schedule a call. Yeah. And another thing, Sarel will put his Calendly as well, so you can schedule demos with the customer success team. So it will be on the chat. And also we have all the links for the 90 days free trial. It's available just by tomorrow, just for the people that are now using the code that Sarel put in the chat. So for new users, use the sign up link. For existing users, go to the settings page, click upgrade, and then on the pop-up put add coupon and put the coupon webinar July 26. Yeah, so yeah, if you want to take a few more minutes for questions, that's okay, but we can, I think, call it to an end, but up to you, Jamie.
All right, I'll do a couple of minutes for you guys, answer as many as I can. We were meant to finish 20 minutes ago, weren't we? But if you guys are getting value, I'll just carry on. Yeah, really important that, like, when people are asking me financial questions, I can only ever share my opinion. It really is worth you just booking in with somebody that's actually qualified to give guidance and that. So let's see if there was more. There's a few different questions about investing down south. In general, if you're not happy leaving in more money, it's because the return you're getting on the money you're leaving in isn't there. So just start looking at higher cash flow strategies. There's several ways of doing this. The two most common is the LHA strategy and the service accommodation strategy. So service accommodation obviously can maximize it. I really recommend trying to get away from the renting to people doing stag do's or weekends, you know, all of that. Find contractors, and a really good way to find out if there's demand is go to your local hotel on a Wednesday night. I know that sounds weird, and just look in the car park on a Wednesday night and see how many vans are in there. If there's a load of vans there, then you know it's probably a very strong contractor market, because all of those companies will be paying for them to work, to go there and stay in there. Even better, most of those vans will have numbers on them. Take a photo of them, call their HR department, ask what they do for logistics for their team. The other one is the LHA strategy. LHA is local housing allowance, but many people think you can only rent out the house to LHA, but that's not true. If you've got a 4-bed, for example, and you put some locks on the doors, you can rent out the whole house to 2 separate families and get 2 sets of rents on there. So if it's a 4-bed house, you can get 2 2-bed houses worth of rents coming in. So anything that's going to maximize that. Do you have any views on Liverpool as an investment area? Yes, I love Liverpool. It's my 3rd favorite spot, I would say. My number 1 favorite spot is obviously Leeds. My 2nd favorite spot would be Nottingham. I think Nottingham is massively undervalued right now, really do as a market, and Liverpool would be my number 3. Talk to somebody that knows their shit there, though, because there's areas where you just wouldn't want to walk your dog. You really wouldn't want to. So just make sure you're getting it right. Jamie, looking forward to seeing you at the boot camp. Oh, nice one, John. See you there, bud. Great nuggets as usual. No worries. Are you saying you'll buy properties even though they don't currently cash flow? Yeah, absolutely. I would 100% be happy buying a property that is losing £100 a month if it's in a strong capital growth area. Because, like, I can suffer, and you need to think of your personal finance situation. You have to bear in mind, I'm making about £500,000 a month. So me losing £100 a month for the long term is irrelevant. So, you know, and I've got those on like either a discount variable rate mortgage that I can refinance out of straight away, or at worst, I'm on a 2-year. So think about it logically. Say I'm losing £100 a month for 2 years. Our interest rate's going to be lower in 2 years. I'm as close to saying I can guarantee it without saying I can guarantee it, right? So I'm willing to lose 2,400 over 24 months to make tens of thousands of pounds over the next decade or two. Like, it just doesn't bother me at all, I think. But I do get it if it's really important for you that cash flow is going to allow you to quit your job and stuff like that. Okay, I completely understand that. What about starting at 60? No problem. Jane, my oldest mentee, is in her 70s and killing it. No issues whatsoever. Great session. Cool. Jamie, I already have a couple of properties. Can I buy one through the Aspire property group and I build the portfolio from them? Yes, Saranjeet. That's exactly what we do at Aspire Property Group. We help people build portfolios. Avi, are you okay if I share a link here, or is that a no-go?
No, absolutely. Yeah.
That's okay, yeah. What I'll say, guys, is a very basic one. I'll just put it in here now. And anyone that's interested in us building you a portfolio, you can feel free to put your details in there. And then anyone that's sort of in the space where actually I'm not ready to build a portfolio, but maybe I could do with some education or something like that, I'll put a link in for that now as well for you. Again, no stress if not, just if it. And for both of these, by the way, I don't really work like most people. It's not put in your details and you're guaranteed get to work with me. With everyone that registers their details, the bottom one's education, the top one's for building your portfolio if you've got funds to invest. We just do a one-to-one consultation with you. So you'll get booked in with a proper strategy session because we might not even be able to help you. Okay, and we go from there. I'll try 2 more questions and then we'll go. Thank you both, really helpful, no worries, you're welcome, wealth of information, no worries. I want to do bridge finance, but I'm worried it's a big risk. Yeah, I can understand that, especially when people that don't know about bridging, they're worried about it. The key thing with taking on bridging is understanding when you're getting out, okay? So bridging, you're absolutely right. Bridging is a big risk if you have no exit plan. But this is why you have to start with the end in mind. Bridging isn't risky at all in any way, shape, or form. It's the person that takes it that makes it risky or not. So you need to be intelligent. So really, bridging is for an ideal maximum of 12 months. Okay. I mean, don't get me wrong. If you went to 15 months, it's not the end of the world or anything like that. But really, you want to be aiming for that 12 months. So you need to be going, okay, what am I refinancing at? And then maybe play a model. You know, if you're intended on refinance, what if it refinances £10,000 below where you think it's going to? Are you still able to pay back the bridge? Is that going to come from the refinance? Is it going to be from something else? And you can think like that. So yeah, it's not risky. Where can I find 30% discount code? That's not for me, I don't think.
Yeah, so I will put it on the chat. 1 second.
No worries. Then looking at Middlesbrough for a potential refurb to 5-bed student HMO. Any thoughts on the area strategy? It's not my area. It's not where I personally would invest heavily, Ben. I'm not a massive fan. I think it's had a lot of artificial growth over the last few years. I don't think it's going to be there in the future. What I would say, though, is number one, do not base your investment on getting a commercial valuation there. It won't happen. You'll see a lot of people presenting deals as if it will. And number two, test it. Jump on spareroom.co.uk and Easy Roommate and put up a dummy room. Okay. Yes, it's a bit naughty. You're putting up a fake room that doesn't exist, but make it look exactly like it were at the price you're doing and see how many people register for viewing it. 2 things. Number one, you're going to test the demand of it because you're going to get loads of applications. But number 2, you make the phone call and you go, hey, really sorry, that property's gone. However, it looks like I will have another one coming available in a few months. Would it be okay if I give you a call then? You're building up a database of potential tenants. And that's probably all we've got time for, guys. Anyone that does want to reach out can go through either of those links if you're interested in actually investing in property or investing in education. But if anyone that just wants to, I didn't answer your question today, and you just want some responses on like a couple of bits, Instagram's probably best. My Instagram handle is Jamie York Official. So you could just give me a follow on there and message me, and I reply to pretty much every message that I get. So yeah, good timing as my voice is about to go. But hopefully everyone got value tonight, and hopefully I've added some value to all of your guys, Avi.
Yeah, thank you very much, Jamie. It was super helpful, and thanks everyone for joining. Again, you use take advantage of the promotion for the free trial, 90 days. Use the coupon code on the chat, or I will keep the chat open for the next few minutes. And subscribe to our YouTube channel to get more content. Subscribe to Jamie's YouTube channel to get great content on almost on a daily basis. Yeah, and you can use the chat, if you have bugs to report or suggest new features, and you can schedule demo with the links that we put in the chat as well. So thanks, Jamie, again, and have a great evening. Thanks, everyone. See you next time. Thank you.
See you later, guys. Bye.